All right, there we go. Devin Ryan, JMP
right.
Securities. Thanks for bearing with us there. Again, let's restart this. Talk a little bit more about Goldman's quarter, and then we'll get into some of the other trends you're seeing in your coverage area.
Sure. Well, first off, it was a absolute blockbuster quarter. $18.60 of earnings. We were the street high at nearly $13. Consensus was $10. So essentially, they squeezed 2 to 3 quarters of activity into one quarter. And I think that's maybe why you're seeing a little bit of muted reaction here. There's questions about how much of this is sustainable, but the reality is the capital markets backdrop is as good as it's ever been. SPACs is clearly a hot topic, and SPACs are starting to come under a bit of scrutiny. But one thing I would say around that is the equity capital markets that we saw this quarter, you're probably only 20 to 25% of the revenues from SPACs have actually come through the system thus far. So you've really got this embedded, terrific runway for the next 3 quarters for investment banking. So people will question how strong this quarter was. This full year looks terrific, even if you do see some moderation in call it new SPACs coming through, and then trading activity was great. And the last thing I would say about Goldman was with the revenue strength and record revenues, expenses were in line. And on the compensation side, I think they're leaving themselves some flexibility for later in the year. So I think results could have been even better if they pulled the lever on compensation, but I think they're saving some for the rest of the year.
Hey, Devin, Brian Chung here. I want to ask about the trading desks at these investment banks so far. What did you see in the performance? Because what was interesting to me was that it seemed like FICC trading was really what kept these banks afloat when a lot of the sell-offs were happening at the beginning of the pandemic. But we saw about $3.9 billion in FICC at Goldman Sachs, and I highlighted the $9 billion over at JP Morgan. So was that above, below your estimates, especially given where bond markets have been trading, the volatility that we kind of saw specifically at the beginning of this year?
Yeah, it's a great question, Brian. So, the equity underwriting M&A theme that we saw in the first quarter, we had modeled pretty well. And so that was a record, but we were there. Fixed income and equities trading were definitely better than we had modeled. And I agree. I think the level of activity and engagement in the market right now is incredibly resilient. Last year, there was a lot of volatility with the pandemic. We've kind of come out on the other side of that where volatility has been declining, yet engagement's still really high. What you're seeing is repositioning in portfolios. You had the 10-year Treasury have a big move up in the first quarter. Securities yields were up 70 basis points, Fannie Mae securities yields. And so you're seeing repositioning happen. And the credit backdrop is still very benign. So people continue to squeeze in for yield. And so that's been pushing new issuance. It's been pushing secondary trading of new issuance. So very constructive backdrop, and I think surprisingly resilient. Similar to investment banking, I think some moderation would be healthy, but the first quarter was an environment where really every business was hitting on all cylinders. That's why you saw a record.
Devin, saw some large, I guess, not any surprise here, large inflows in the asset management businesses of JP Morgan and Goldman Sachs. Is that the influence of this rise in the retail trader we've seen in recent months?
Well, I think there's 2 different things going on there. So there definitely is the rise of the retail trader, which we've spoken a lot about, and that's affecting, I'd say those 2 firms to some degree, not as much as some of the others like Morgan Stanley. On Friday, you're going to see really strong wealth management results, partially because of the E-Trade business that they own. But I would say for both Goldman and JP Morgan, there's a concerted effort around fundraising, alternative products, particularly at Goldman. I think they're having a lot of success on some of these newer growth initiatives and third-party fundraising. And so, asset management being a capital light business is an area that I think a number of firms are focused on right now. And some of it's kind of a tale of 2 cities. Some firms are moving in the right direction and seeing really strong inflows. Other firms are facing kind of those secular headwinds in the more competitive parts of asset management. But I would say Goldman and JP Morgan are having a lot of success in areas that are a little bit more differentiated.
And Devin, all eyes, of course, today on the Coinbase IPO. When you talk to your contacts in the industry, how serious are Goldman and these other investment banks at getting into crypto? And a year from now, are we sitting here saying, hey, because of these investment banks being in crypto, they just beat on earnings?
Yeah. So in my opinion, there's no doubt that these firms will be in the crypto space. This whole ecosystem we follow closely, and it's not going anywhere. It's gaining steam. So on the institutional side, acting as custodian, transacting with clients, to the extent clients are engaged in the market, these firms will get there. I think there's differences between the institutional part of the market and the retail part of the market. But even Morgan Stanley announcing a couple of weeks ago that they're going to be allowing their clients on the retail side to buy into Bitcoin funds directly, I think is a sea change for this space. And some of the firms I think are a little behind the curve in terms of understanding where the ecosystem is going. But there's no doubt in my mind that firms like Goldman Sachs and JP Morgan and Morgan Stanley are eventually going to get there. There's a bit of channel conflict, right, with their business model. So I think there's that push and pull. But to the extent clients want to be there and want to transact in these in this asset class, these firms will have to get there, and I think they will.
And Devin, speaking of transitioning business models, I had almost forgotten that Morgan Stanley purchased E-Trade, and that's certainly a change for them. But Goldman, right at the top of their presentation, has a nice pie chart of the mix, and 36% of their revenues in the latest quarter coming from asset management or the consumer side of the business. As you think about Goldman specifically over time, how do you kind of see that mix changing within the portfolio, or do you think that at least the Solomon regime is happy with where they've gotten to?
Yeah, it's a great question. So this quarter is a little bit unusual because in the asset management segment, there were some huge gains, especially in the equities book. And so that makes it look a little bit outsized, maybe relative to what it is normally. But the reality is they are pushing hard into some of these consumer and asset and wealth management areas, which are for Goldman really newer and smaller growth parts of their business in terms of just the absolute size of it. But the growth rates are very strong. So the consumer business year over year grew by 16%. That's going to, I think, consistently grow in the double digits and maybe a high double digit rate for the next handful of years. So just by definition of that growth, it's going to become a much larger piece of the overall business. And they're doing it in ways that I think are differentiated. They're leveraging technology on the consumer side. They are going into parts of the market that are large addressable markets, but a number of firms haven't really figured out how to offer all the products and services that Goldman has the connectivity to be able to do, but also the balance sheet and the resources to be able to do. So they're operating in somewhat of a startup mode, but with all the resources that Goldman brings to bear. So I think it's a pretty compelling model, and that's why they're going to be able to grow that business at a pretty good rate over the next handful of years.
And Devin, lastly, what's been interesting is that it seems like Morgan Stanley's been getting a bid pre-market as a result of the Goldman Sachs earnings, likely, even though they haven't reported this morning. Broadly speaking, though, outside of the intraday movement here, do you think that there's more to go in these bank stocks broadly? I've been talking to some people that say there could be a 30 to 50% upside with that economic optimism rising. Do you see that as the case, despite the fact that there's already been a pretty impressive rally in financials since November last year?
Yeah, so there's a couple things going on. There's obviously the interest rate trade. Interest rates have really started to move over the last 3 months, and there's no really better way to play that than financials. So I think even though these stocks have been moving and on paper they're not necessarily as cheap as they were, I think we're still early days into the interest rate trade. So firms with exposure to that I think have a benefit. And then just the broader reopening, the broader economic recovery trade is good for financials also. And so you've kind of got this double benefit as you're thinking about going forward here. So yeah, the stocks have done terrific, but we still think that there's room for upside. I want to be more tactical. So I like Goldman here. The stock's still trading at less than 10 times earnings. Numbers are going to have to go up after earnings today. And even with that dynamic of questioning how much of this is sustainable, it's still a better environment than I think most people appreciate. I mean, they almost beat numbers by 2x, right? It's a blowout quarter, and so numbers will have to go up following results today.
All right, Devin Ryan, analyst over at JMP Securities and Yahoo Finance's Brian Chung. Thank you both for jumping on. Devin, really appreciate you taking some time to talk with us this morning. I know we'll be in touch.